For technical analysis, we'll have to use some charting software, and I'll be using Thinkorswim and TradingView most of the time. And for TradingView, you can use the free version if you don't want to sign up, but free version you are only able to add up to, I think, 3 indicators. So you cannot really add all the moving average over here. You can only add 3 at a time. Okay, but for demonstration purpose, I will show you how to use both using these two software to plot in the support and resistance based on horizontal line and also moving average. Okay, let's start with Thinkorswim. I'll start with drawing a horizontal line. You hover over to this time frame setup, choose weekly. Okay, you can go to time frame, you can choose week to determine how the price move within the whole week. And if you use day, is how the price move within that one day. For those who are not familiar what is a candlestick pattern, basically candlestick consists of 4 things: the open, the closing price, the high price of the day, and the lowest price of the day. Okay, so you can get this information over here. You can refer to this side. Basically, it will tell you what is the opening price, what is the high price, what is the low price of the day, and how much the price is closed at. Every time when you hover, it will show based on that week itself, because this is a weekly chart. And if you have not selected weekly chart, please go and select weekly chart, because that is the chart I'll be using for this demonstration. And weekly chart, you have lesser gap compared to daily chart. And if you want to see daily chart, how does it look like? Let's take a look. You see a lot of gap up, gap down. But for a weekly chart, you have a more consistent chart over here. Lesser gap. Right? Back to the technical analysis. If you have not set your setting over here, you just refer to how I set my chart if you prefer to follow me, because I have actually changed the way I like to view the chart. But if you want to see it how originally, you can just leave it as it is. I'll just leave it over here so that you can copy. This is for general, and this is for price. This is for the time. This is for favorite, but favorite you can add your favorite time zone as which is the time frame that you want. Sorry, not time zone, time frame. Okay. And appearance. This is for equities. Equities basically means stocks, and we don't need option, futures, and forex because we are not going to cover the rest of this. Okay. Once you are set, now this is a drawing tools. You can go to here and choose a drawing tools that suits you. I will only show you 3, which these 3 are the most, the one that I use most often. Now you have the first one like a hand. Basically this one you can use it to move around, like click, grab, and move around. But to move around, you need to make sure you select manual instead of auto. The second one, okay, you can use over here to do drawing. You can right click to add a drawing. You can also go to bottom here to click. You see the hand, click on the hand, and you can just choose from here also. Okay, the second one is the arrow. Now the arrow you cannot grab and move around, but arrow enable you to select a time period that you want to focus on. Let's say I want to focus on here. Oops, sorry, hold on. Now if you go, if somewhere in the middle you go wrong already with your chart, you just right click auto zoom, you'll come back to default. Now you can go back here, click and drag. Okay, I only want to focus on this period. And from here, you can do your drawing, your horizontal line with this one. Okay, just show you what is this line about. Okay, once you click this line, you have one horizontal line over here. Depending on your preference, you can right click at the line, edit properties. Now, you can show the price. Maybe you want to show on the left or on the right side. And right now, if you see, when I click from this point to maybe this point halfway, it automatically plot until the end. That's because I turn on the extension. But if I don't want, I just want to turn off the extension, you can choose over here. Okay, and you can choose the color of the line whenever you want to distinguish between different point. That's up to you. How what kind of line, whether it's a single line or a dotted line, and the width of the line. Now I usually just remain these two. Even the color I don't really change so often, but for this demonstration purpose, I'll just change it to blue line. And price, I will always leave it to show on the left or the right side, depending on how I want it to be. Now, once you do your setting, you have this price show over here, and you have your horizontal line shown whenever you click on your first point and end on the second point. Now, to draw a horizontal line, you just need to see which are the point that it touch very frequently. Find at least a point that you can touch 3. Now, at the beginning, you might need a bit of practice because you're not familiar, but as you progress further and do more practice, you are able to identify even with just looking at the chart itself. Okay, so from here, you can see that the line that I draw, now the price go up and come down, form a higher high. Okay, in these instances, we just call it swing high and swing low. Okay, swing high and swing low. It's same as identify your higher high and higher low. Now this is a swing high. Swing high is where the price go above, hit a top, and before going down. And swing low is a price go below and make a bottom before going up. Okay, this is your swing high, this is your swing low, this is your swing low, swing low, swing low, swing low, and this is your field swing high. Of course, you can draw many more. This swing high, when the price hit and come down, before I draw a line, okay, let's say this line don't exist. Let's say I remove the drawing. Now you don't know where is this line, okay, but you only know this is a swing high before coming down, and this is one resist. This is what we call a resistance, because imagine there's a force that is resisting the price from making a further high, and it come down after reaching this point. Now, resistance can be turned into a support if the price can break through the resistance level and start forming a support at that line itself. I draw a line over here like just now. Now if you take a look at this line, oops, again, okay, take a look at this line. How come this one is okay? Guys, you have to just save as default. I forgot to save as default just now. Show price of blue color. Okay, and I save as default. Okay, so over here, now this swing high is now become a support level. You see, after the price breakthrough, come down, it form as a support. Support means when the price go down, it is not going down further. It's like something is supporting it, and the price go up after hitting the support level. So you can see that it come down to this support and bounce, almost touching it, also almost touching it, and this one touch it and goes up. So support and resistance line, you can draw when the point is touching at least 3 times. Right? This one you can also treat it as it is, touching. Now you don't have to touch exactly because support and resistance actually is a range, but for simplicity we just draw one line across because you don't want to draw too many lines over. It will only make you confused. Now apart from this, let's draw another one. Okay, go up and come down, resistance. Go up and come down, this is a support. Can this be another line? Let's see. This is a trial and error. If you're starting, you can just draw a few lines and see whether or not this is a valid line. Let's say I want to draw over here. Touch as many lines as I could. Okay, I remove all this drawing. This is a resistance. After hitting, the price go down and break through and come down to find support again, and go up and hover down to find another support level, which you have 2 times support. And if this line I were to draw across, this is almost supporting, so I'll just take it as close enough to this horizontal line, so I'll just leave this line as it is. You can actually make a bit of adjustment, just adjust it to be a bit higher and to touch this line. Okay, you can do it like that also. So this is how you draw a support and resistance line. Not always supported in resistance, although it happens very frequently. Okay, this is a resistance, this is a resistance, this is a resistance, but after it comes to this support, it further break down and go up. I don't know if in the future, if it's going to come back to this line as a support line, but nevertheless, this is a valid resistance line. Okay. Okay. Here there's a resistance that turns support. Over here, 1, 2, 3. Is there any support line only? Let's see. Okay, over here. Now this is a support line. Come down 1, go up, twice, go up, and third, go up. But this line is not resisting any of the price action before this. Okay, so this is a very valid support line. Okay, it don't have to be a resistance, come down, break through, and then support. This, of course, is a very nice chart that you can see is slightly sloping up. Of course, you just neglect this part first. But certain chart is a bit range bound, which means their price don't move in a straight this 45-degree upward movement. In fact, it goes very choppy, like up, down, up, down, up, down. Now, for those up, down in a range movement, you will find that there's a lot of horizontal line across. Coke. Okay, for Coca-Cola, the recent price action is actually range bound. Okay, you can tell that it's formed within this range. Oh, sorry. Within this range until this range. Although it has a bit of break, but it still moved back up to the range very quickly. Okay, the price action is formed within this range. And within this range, you can already identify that every time when the price hit a certain level, it go up, and hit a certain level, it come down. Now, if you draw a line, that will be your support line over here and resistance line over the top. Remember, I said that this support and resistance can be a range. So you see, I just put this okay, I choose to draw a rectangle over here to indicate that this is a range of a support and range of a resistance. But if let's say you don't want to draw this range, you can just clear the drawing. If you just draw across, it will be somewhere like this. Okay. Now, although it's not touching over here, but you can still consider this is low enough although it can still go a bit lower, but this should be the level because it is touching 1 point, 2 point, 3 point, 4 point. Now I don't consider this because it don't really bounce off from here. In fact, it goes below. Okay, and this is also can be another support level over here. Now, if those price action that go down a little bit and bounce up immediately, you can consider it as a valid support level. Okay, and this is also a little bit of range bound. About here. No, man, I'll just draw over here. Now, although it's touching 2, but as long as it's touching like multiple and this is close enough, I will still consider it as a range. And for the resistance, you can draw over here. Okay, you can consider this is your resistance line, your support line, and this is your resistance line, and this is your support line. So this is how you draw a support and resistance within a choppy market. Now, this line, I can technically extend it further to include this drop, okay, to make it 1, 2, 3, and 4 level is supporting. Like I said, even if I adjust it a little bit, if it's dropped a bit further, it's okay because this support line is supposed to be a range, so which means the range of support is over here, this whole level. This will be the support range, okay, and of course this will be the resistance range. Over here at this level. So this is how you can draw this line based on the price action. Okay, and of course if you want to look at the maximum time frame, you can just go to a bigger time frame. Let's say I want to go to maximum available. So ever since Coke is available for trading, the price started from here all the way. You can also, based on big picture, draw where is the horizontal line, the support and resistance, like you see over here. Oops, I shouldn't use this. Okay, over here there's a few support line. This is also a good support line, and this is support line can actually extend until here. Okay, and also you can you see some resistance line. Okay, look at this all-time high at this point of time. This all-time high, if you draw a line over here, and you will realize that when it breached another all-time high, it will actually come down and test again and come down before finally it managed to break through. So usually for all-time high, if you draw a line across, you're also able to find a multiple support and resistance line over here. Now, of course, all-time high I'm referring to, if you look at the left of your chart at this point of time, in the history, you are able to determine where is the all-time high at this moment. From here, this resistance from all-time high are usually very strong. So every time when it go to this resistance, it come down and go up one time. If you look at here, go up one time, fail, go up second time, fail, go up, breakthrough, form a bit of support but fail again, and then go up, form support, go up, and then come down. This one, when it come down, it try to break again, form a resistance level. This line is now acting as a resistance, and of course fail to break out, and finally the price managed to break and now forming a support level, which is supporting multiple level over here. So that's how you can actually look at support and resistance at a bigger time frame and a bigger picture. Okay, now I'll clear all this chart and I will move on to simple moving average, which is another indicator that we use to look at support and buy level. Let's take a look at moving average, how moving average can serve as a guide to determine different price level as a support. Now to add in moving average, you can go to study. This is a study symbol, or you can also right click study. Study here. Okay, edit study. You just need to key in simple moving average. You key in SIM, it will come out. Okay, for this you can enter as many as you want. So for us, we want to use the 20, 50, 100, 150 and 200, total 5. All these are by default, they use 9 days moving average, so we have to change accordingly. The first one, we use 20 days, and also take note to use different color to assign to different moving average to distinguish them. Use 20. This one is 50. Let's put orange. And then 100. 150. And lastly is 200. Okay, once you click OK, it will come out here. You can save studies. Okay, so you choose your save name, and you can go to load whatever study set that you have. For moving average, okay, moving average work well in a very nice 45-degree slope moving company. You see, every time when the market go up, it will come down and form a support at a certain moving average. Like for Coke, okay, from here, okay, here is the start of a uptrend. You can tell by looking at all the moving average is sloping up, okay, and one is above another, the 20 above 50, above 100, above 150 and above 200. Okay, so this is the uptrend. But of course, in the short term, price can go down a little bit, and that's where your short term moving average 20 will cross 50, cross below 50. So when 20 cross below 50, it's a temporary downturn. But as long as all these, especially the 200 moving average is sloping up, we will still consider it as a long-term uptrend. Now, every time when it comes down, it will form a kind of support at one of the moving average. Okay, like this. It forms a support at moving 50 moving average. This one also form at 50. This one I would also say 50, although almost hit 100. This one is 100. This one is 150. And over here it's 100, 150, 200. Here, of course, 200. Here it's supporting at 200. Okay, 200 moving averages is a very strong support. So if the price movement, especially on a weekly chart, coming down to 200 moving average and it start to bounce off, although not all the time, but a good company that come to 200 moving average bounce off from here has a good chance of moving upward. Okay, Nvidia has been going up very smoothly over here until this 2018, end of 2018, 2019. Let's say the intrinsic value of Nvidia is over here, $65. Okay, and now you want to buy based on moving average. You see it's nicely sloping up, and you only have a location of your funds. Say you want to deploy 10,000. $65 minus 20% is about $52, right? Should be somewhere about here. Okay, the nearest moving average is about this level. Let's say you are, okay, before that, you will not know where's the price. All you know is the price is expensive right now. based on fair value. And based on moving average, these are the few support level. And you know that 20% is at $52. $52 is about here. Okay, it also coincidentally is at your horizontal support level. It's near enough. This is your horizontal support. You can choose to buy here, but if you don't want to choose to buy here, you can look at this moving average. Now this 50 moving average is at about $58, which is not yet the 20%. So you can choose not to buy at this moving average. But based on this horizontal moving average, you can choose to buy here at $52, which is your 20% discount. And anything below this, you can use support, this SMA support. Like this is $45. So your second allocation, that is your first. Your second allocation, you can use $45. Your third allocation, you can use about 30, let's just say 35 for easy calculation. And lastly, you'll buy at 25 for easy reference. So this is how you can determine your first allocation, second allocation, third, and even fourth allocation based on moving average. Now it may or may not go down, but it's okay because this is your entry rules. This level 52, you definitely already bought because the price is here already. At $45 level, you are able to get your second allocation. At $30 level, where's $30? Sorry, $35 level, you also already get your allocation. The last $25 level, since the price did not breach the $25 level, basically you miss out on the fourth allocation. But that's fine because you already get 3 out of 4, right? And your average price should be somewhere around here, right in the middle of all these 3 allocation. And then if you go up back to previous, now you see this is the all-time high at this time. When it breached this all-time high, you would have already made profit rather than break even. Now of course, a good company will always increase in value. Over the long run, it will keep increasing. Now every time it go to a support level, let's say you want to use a dollar cost average instead of this moving average or any support and resistance level to determine your buy point. Sorry, I rephrase. You want to use dollar cost average to buy at every support level. You can do so, but again, that is not the dollar cost average that I have taught you earlier, but you can definitely use this as another method. This is more similar to buying the dip. So every time it goes to a moving average, let's say you're a little bit greedy, you don't want to buy at 20, you want to buy at least at 50. Now you can buy at this point, you can average at this point when it dropped, you can average in at this point when it dropped to 100, you can average in here, you can average in here as well. So this is also another method that you can use this moving average to determine which is your few buy point. Okay, all this is what I previously drawn, so you can just ignore all this. Now of course, once you hold over the long run, you will definitely see up and down, and as the company is becoming more and more profitable, the intrinsic value of the company will actually keep going up. So if you buy at this point and your intrinsic value at $65, just because it go up to $120 over here doesn't mean it's overvalued, because by this time the valuation can be even higher, maybe at $200. So periodically you can actually check how much is the company worth at that point of time when you decide to buy. Okay, so basically that's how you use technical analysis to determine a buy point. And of course, if it's too technical for you, you can just use the previous price retracement method to decide which is the buying price point that you are comfortable with without referring to the technical analysis.